Welcome to TradeTheMBI.com. This is John's reports for the 10th of October. Well, not a surprise. So we had our peak move from before, and then yesterday we were already pointing to a dip move of the magenta below yellow. So we got that exact result, which was the negative close. Now we did dip below the yellow line. So what we were talking about before was dip becomes your buy, sell at your peak, buy at the dip, sell at your peak. We now have the dip, but we dip below the yellow line, so you have the potential that you could see a little more softness from that. The fact that we have the declining MBI white uh, helps in the stability aspect of it. So if we do get the intraday pushback going up, then you'd have your recovery back up to the positive side of the MBI yellow, and that would suggest at that point then that you're going to get your higher close. We do see that we have very narrow DOC, so you're not getting a large spikes. There really isn't a whole lot of movement built into the where this configuration is at this particular stage, and still plenty of room for short-term buyers. They really haven't applied everything into this construct at all. So odds are you're within a weak configuration, but that it should still hold up fairly decent. And there's still plenty of range between 100% and 76. Hasn't even been explored. And market's just continuing along. From an NQ standpoint, big difference though. You had the dip, you stay above it, so the expectation is the NQ will finish higher, and that should be enough to lift the Nasdaq up as well. So that becomes a very clean way to look at it. You can see starting with a little turn back up of short interest all the way up to a whopping 3.8. Still well below the 10. So the bias for the up move continues, even if it's, jagged. Not a surprise. That's still a mean reversion in its own sense, even if you're having continued escalation on the upside. And again, Treasuries, nothing happening. The Fed, with all of its talk saying, well, maybe we need to be a little bit softer. But the unemployment situation and job situation continues to deteriorate on a daily basis. And, again, we knew that was going to happen. It's just not until next year before things are, really scheduled to pick up. And again, it becomes a question of energy. And, do we break these lows? And that starts to turn around the, inflation situation. There's a lot of moving parts within the segment of it. Uh, are the policies still the best choice? Yeah, given what we're seeing, the shutdown still going on. Amazing how that used to be the calamity of all time, and not so much. It's still going to have an impact on GDP numbers, which I think is ultimately what the Democrats want. They want to show that there's weakness, that the policies that they can say don't really work, kind of situation. But it's really not an accurate description. Besides, just the idea of reducing the number of government employees creates an unemployment change in that, relatively speaking, and that has an impact. And but moving those jobs to the private sector in the short term with the pain, ultimately that is the best configuration, because the fewer government employees you have, the more private sector work is happening, which is real productivity. Government doesn't produce anything GDP wise, so why they even counted spending, and it's always been an interesting one. It's a way to disguise the ability to shift money to social programs. The euro, yeah, what a shock that the collapse is starting to escalate, because the problems in France are really just starting to exacerbate what's already been seen in Germany and the loss of production in that. And even the Fed, well, actually, the Treasury, Bessent, he jumped in and bailed out Argentina. Obviously, they like the policies that Argentina is expressing, but they had to provide them liquidity. Was it $20 billion worth? Buying Argentine pesos just to support uh, it from collapsing, because then you're going to get uncertainty, and this is where things get interesting if they start to unravel. And then there's no question why you see gold doing what it's doing, why you see crypto doing what it's doing, and it becomes an obvious reality. Um, Gold did pull back a little bit, and it's been a long run, so not a surprise. Still, signing under red. You got a complete reset of the DSC. Steel at this particular case, but you're under negative 13. So until it pops back above, that would be your return move. So just becomes a opportunity to buy a little bit more of a dip. The same thing you see happening within BTC in that you got a DOC spread for the first time in a while, but you've got a full reset of steel. So you're not looking at a calamity of any sort, and even a little bit less reaction from ETH. So those are all pretty consistent within what we're seeing. When we look at it from the 50K, we had the MBI white spike. So yeah, but you have magenta over, so you have to wait. And once the collapse started, boom, your expectation is the 50% move. And we did exactly that. Actually, followed through a little bit further because MBI white stayed in the lead for a little while. But then you had this crossover right here, and that was it. That was your magenta over yellow, MBI white below, and then it became just a power move because MBI white started to spike, but you had magenta leading it. So that's a forced short cover rally, and boom, that's exactly what you're getting right here. The question will be, can magenta overtake the yellow? Otherwise, you're going to end up with the same situation as over here. And if it's not at the same highs, then you're going to end up with a slightly lower high turnaround situation. Intraday, it was all about destroying the call buyers, and then did a good job at that. And then later in the day, they let them come back in to wipe out the puts that had added in. And then we moved into the Asian session. If I can get that to scroll across cleanly. It was fairly clean, but the European session just a little bit back and forth. And you get peace in the Middle East developing, and again, those are wonderful things from a broader humanity standpoint, but from a geopolitical spending, without new weapon systems being bought and things like that, you end up with the problem of spreading U.S. dollars across the globe to sustain things. So, yeah, there's the negative side of peace. There are times where you can call it a peace dividend, but in this particular case, when you're in such a heavy debt-laden situation, most of it's just to prop up other countries and to keep them going at this particular stage, given what we're seeing from the worldwide fiat debasement. So that's a reality in and of itself. As always, though, anything relevant, I'll put it on our team chat. Have a good one. Trade well.